Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading, but much more specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. In this video, I'm going to show you an example of a successful morning gap trade. You see it on the screen. It's AES. We're going to talk about it in more detail in a couple of minutes. But first, what I want to show you is exactly what gap trading is and why it solves two of the biggest problems day traders have. Number one, finding the right trades to be in, and number two, finding the right price to be in those trades at. Gap trading is when stocks are gapping higher or lower at the open. It creates opportunity. And the opportunity for traders is when they can identify specific prices where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. In my course at LazyGapTrader.com, I teach traders everything they need to know in order to trade the gaps successfully. Which stocks does this work the best with? What are the criteria we use in selecting the stocks? What kind of volume do we look for? How much of a gap higher or lower do we look for? And of course, something extremely important, how do you calculate the specific price levels where these stocks will first be drawn to and then have that price reaction in the other direction? All these details and a whole lot more are taught in my course at LazyGapTrader.com. The other thing I do is I give traders an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the opening bell even rings. Here's a copy of the email that went out this morning. As you can see, it arrived spot on at 9 a.m. and that's Eastern Standard Time. So if we scroll down, what you'll see here is we had 6 potential morning gap trades on the board. Now today is also known as Heartbreak Hotel because 3 of these stocks came very close to their levels and had a tremendous rally, but just coming up a touch short. So we had some front runners in there today. I'm going to show you the charts of these stocks anyway, because what it does is it displays the power of these price levels and how this works over and over and over again, even though we missed by just a penny even and a couple of pennies on other ones. The takeaway or the lesson learned here is the power of these levels and how profitable of a strategy this is. Listen, they don't always miss the levels. A lot of times they hit the levels and then have the tremendous rally we're looking for, and that's how we put profit in our pocket. Some traders jump in ahead of time. I put my orders in on the numbers, and that's okay. Anybody that was able to make money on the ones I missed today, good for them. I'm happy that they did. But the bottom line is, we only want to take trades at the highest probability price levels we can find. When we do that, we find success over and over and over again. It takes a lot of the guesswork out of the trading, and it adds confidence to the trades that we take because you have a certain level of expectation at these price levels. I'll explain more in a couple of minutes. Let's go over to the one that actually did hit a bullseye today. It was AES, gap higher. Resistance levels are $11.94, $12.81, and $13.79. I give multiple resistance levels and multiple support levels on these stocks because each of these levels are independent trades to one another. Sometimes we will get multiple trades out of the same stock in the same day. Stop and profit target is about 18 to 35 cents. These are minimum profit targets. I'm going to show you how that works when we go back to the chart. And like magic, we're back on the chart. So AES closed yesterday down at $10.73. It was gapping higher at the open. And the reason why this happens is it's either from a news event or an earnings announcement. A lot of times they're one and the same. Stocks are moving at the open. That creates the opportunity. That's what day traders are looking for. So this stock was gapping higher, creating a possible shorting opportunity. We've identified a price level of $11.94. You saw it in the email a minute ago. You can see it depicted by the horizontal line running across the screen. As you can see, see, as soon as the stock hit that price level, pierced through it by just a penny, it immediately had a price reversal in the other direction and already making a low for the day down at $11.54. That's over a 3% gain. It's about 3.3% in just minutes worth of trading. We took no heat on the trade. We were never out of the money on the trade. It immediately reversed and put money in our pocket. And the point is that we got more than the minimum profit target. In my course, I have an entire video module that explains how to get the most out of these trades. Traders learn how to turn these trades into risk-free, emotionless trades, getting the most possible gain, the most possible profit out of these trades. 40 cents on an $11 or $12 stock is a tremendous scalp and or day trade. Now we're going to take a look at a couple of heartbreakers. APPN was one of them. You can see here where the stock closed yesterday, all the way up at $38.33. The stock was getting a nice haircut at the open, creating the opportunity that we're looking for. From the email this morning, you saw $34.23 was the price level. That's the level of support where we're looking to buy the stock. And by the way, these are the same price levels that anybody that's taken my course is able to calculate on their own each and every day. But look what happened. The stock made a low of $34.24, missing my entry by 1 penny. Some traders got long in front of me. I get that. I understand that. Good for them. Look at the tremendous rally off that level. Right now, as I make this video, we're trading at $36.76. That's a $2.50 gain off the level that I happen to miss by a penny. Other traders might have skated in early, but look at the tremendous rally. This is the point I wanted to make. This goes to show you the power of the support levels that I teach traders how to calculate on their own in the course at lazygaptrader.com. We do this each and every day. You've seen the videos on YouTube. There are literally hundreds and hundreds of these videos on YouTube. I make them each and every day. This works over and over and over again. Here's another one. Didn't miss by a penny, missed by a little bit more, but I want to show you exactly what happened. Symantec, the level from the email, which is the same level that any trader that's taken the course was able to calculate on their own, was $25.43. This one happened to make a low of $25.65, so it didn't come that close, but look at the power of how this price area was supportive of the market. We're now at $27.05. Tremendous rally off that zone. And there's another one just like it, but in the interest of time, I'm going to wrap this up here. The last point I want to make is what traders learn is the why behind the reason this works. That's the most important takeaway, and how learning this strategy can change your day trading from this point forward. The reason that is because once you understand the why behind how to calculate the support and resistance price levels, it gives you an entirely different expectation of what you can expect to happen at certain price levels. What that does is it takes a lot of the guesswork out of the trading, and it adds back confidence to your trading because you understand and expect that certain things should happen at certain price levels. That changes your day trading, mark my words. This is a strategy that you can use each and every day for the remainder of your trading career. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.